Hello, I'm Troy Harmon, Director of Research at Henssler Financial, and the gentleman sitting to my right is Nick Antonucci, who is a Research Analyst. This is your Wall Street Week Ahead for the week of May 1st, 2017. Nick, let's get started with some S&P 500 earnings reports, which have been looking pretty positive.
They have, Troy. We're about 40% of the way through. 180 of the S&P 500 has reported so far, and we'll get 129 additional companies reporting next week. So far, we've seen sales about 4.5%, while earnings are up almost 13%. Now, that's a little bit less than what we're expecting for earnings season as a whole, but still pretty good so far.
Absolutely. It's better than the analysts expected by about 5.5%.
That's correct. Some of the strong sectors have been energy and materials, as well as information technology. Energy and materials isn't a big shock to us. Those are coming off some rough years of earnings decline, so we're comparing to a year ago where the numbers weren't too impressive.
Absolutely. Nick, let's move on then to economic information for the month of April. We've got ISM Manufacturing Index reporting on Monday, consensus 56.5, which is down from March's numbers.
Yeah, March came in at 57.2, and if we actually do get this 56.5, it'll be the second consecutive monthly decline that we've seen. Now, the ISM Manufacturing Index is a survey based on about 400 purchasing managers across 20 different industries. It's usually one of the first reports of the month, and it's a good indicator of GDP, so we'll be keeping a close eye on it, despite the fact that we do expect a decline. Seems like manufacturing might have just expectations got a little ahead of themselves.
Absolutely. We watch it so closely because it is highly correlated with GDP growth, which is the main number that we watch for the economy. Next, we'll see ISM non-manufacturing for the month of April, which is a long-winded way to say services index. Again, consensus at 56 is down a little bit from March.
Yeah, that's right, and it's similar to the manufacturing index, except for the fact that, as you said, it's services-based. Survey about 370 purchasing managers across 17 industries, and why we watch this so closely is that services account for about 80% of the U.S. economy.
Right, huge numbers. Next, we'll see FOMC monetary policy meeting, which will kick off this week. Not really looking for any major action out of the Fed. We did see an interest rate increase in March. Not really looking for much.
Right, probability for a rate hike in this May meeting is only about 11.1%, so we're really not expecting to see any changes. We probably have a pretty good idea of what the Fed's going to say at this point, but looking ahead to the Fed's June meeting, the probability of a rate hike stands at 73%, so likelihood is obviously much higher there. We'll have to see how some of the economic data plays out, whether it's inflation or employment situation related, which, speaking of which, it's the last release of the week for us this Friday.
Absolutely. Employment situation for April is expected to come in at 190,000 jobs having been added to the economy. We have to have about 126,000 just to keep up with population growth. Unemployment up 0.1% to 4.6%. March number was bad.
Yes, 89,000. So if we can get back up to 190,000 here, see somewhat of a correction, it would, help us sleep a little easier knowing that the employment picture is not, starting to tarnish there.
Right. The market takes its cues from the employment situation, right, especially on that Friday release day. Guys, this is your Wall Street Week Ahead for the week of May 1st from Henssler Financial. Thanks for watching.